Frank Mwiti is the Chief Executive Officer at the Nairobi Securities Exchange. He's our guest for the next hour. Good morning, Frank.
Good morning. Thank you for having me.
Good to have you. We came to the NSE. We didn't see you. I think you were very busy preparing for the bell ringing of the Kenya Pipeline shares. We saw you later moderating the panel discussion. But yes,
we skills learned from you.
I've taught you well.
Very, very.
There's a backstory here, by the way. We'll get into it in a moment.
Frank, to welcome you to the conversation, Janet is going to give you the day's quote.
Right. Today's quote is by Herbert A. Simon. He was a scholar from the US, and he once said in the 70s, "A wealth of information creates a poverty of attention."
A wealth of information creates
a poverty of attention.
A poverty of attention. Okay. Well, first, I think actually I'll take it at face value, Janet, because in the world we are living in right now, actually one of the big issues is attention deficits and consuming a lot of information but not necessarily acting on it. So I would agree with that quote in the context of it's too much. It's too much information from all sorts of channels and sources. And I think you jump from one piece of information to the next one, It feels very busy. But when you go to bed, you're not sure whether
what you achieved. Correct, that's a good way of breaking it down. Exactly. It's a reality. It's a lived reality for many people.
True.
So, Frank, we've had conversations with the chairman of the NSE here, Kiprono Kitoni, twice. And every time he comes here, he's, very boyish. He's like, this NSE is performing very, very well.
Yes.
We've had very good performance over the last couple of years. And the Nairobi Securities Exchange is a place to watch and a place to invest in.
Correct.
What is that performance, if you were just to break it down for us?
Okay. So first, again, thank you for having me. And my chairman is actually very, very right. If anything, he's probably a bit reserved. We would be shouting even more. Let me take you back to 2024. In 2024, and I will, as I mentioned these things, I will also explain what they really mean for you and I. Okay. In 2024, NSE was voted the best performing exchange in Africa by MSCI. MSCI is an international, well-recognized entity by Morgan Stanley, okay? What that meant is that any investor, any person who bought shares by and large on the NSE, as compared to other exchanges in Africa, and then the ones we really compete with in Africa are the likes of Joburg, Egypt, Nigeria, Morocco, they would have made the best returns, the highest returns at the NSE. Okay? Now, you have an option here to have invested at the NSE or to have invested in, as an example, Nigeria. So if you did that in 2024, more money to you. Come 2025, we were voted, again, the second only to Egypt. We returned, on average, 51% on dollar returns, okay? What that means, again, is if you put your shilling in any, more or less, any stock on the exchange at the NSE, again, compared to other potential exchanges in Africa, actually you'd have, again, made some of the highest returns on the continent, second only to Egypt. Okay, but in reality, what that actually means is that number one, we are talking about people who have a habit of investing on the stock exchange, not necessarily people who are, let's say, fresh to it.
Yeah.
Okay. Which is what we are trying now to address. How does this become a habit? For Janet, for Eric, for myself, for my mom in my village. How does that become a habit? And more importantly, how easy is it to actually come to the market, make those returns I've just mentioned, and more importantly, do it over and over again with ease and convenience. And we'll talk a bit more how we've been changing that. And then the third bit to also think about is how does that compare to other investment options that you have? You could invest in a piece of land in the middle of nowhere, as we all do.
50 by 100.
50 by 100.
Touching tarmac.
The railway is passing here, they are going to build a mall next to it. You know the deal. You probably haven't even seen the piece of land, but you bought it anyway.
Exactly.
That's an option. There are other options. You could put money in SACCOs and chamas. People do that. You could deposit money in a bank, hope to get a return on your deposit. You could invest in even government paper, get a good return as well. You could start your own business. There are all options, all types of options. You could gamble. A lot of young people are doing that. And 95% of them lose money, for the record.
95%.
Okay? Yes. So the options are there. The point here is, why is NSE one of the credible options to have in your toolbox? I'm not saying the other options are not valid. Because it depends on people's ability and risk appetite. But why is the NSE one of the best options in that category? And how do you actually access it? I think that's the conversation.
That is it. That's it.
Yeah, because I was going to say, I'm trying to think of another time that there was such an intentional push by the NSE, as the push that we're seeing now. Because right now it's palpable. People get a sense that NSE is really trying to be inviting and trying to diversify and make sure that more people are able to. Is that a myth? Has there ever been such other time? And if not, why has this moment now been so important to invite others to also be part of?
Got you. All this vibe, as you're feeling now, is courtesy of our new strategy. Okay, I joined the NSE as CEO in May 2024. And the first order of business was to craft or formulate a new strategy to guide the NSE for the next 5 years. That was our 2025-2029 strategy. In formulating that strategy, we looked around, other markets that are more successful than ours. What's the ingredients that are making that, bringing that success? What our competitors are doing, how people are interacting with investment generally. And it became clear, number one, we have to increase local investor participation. And local investor participation, by and large, falls into two categories. Institutional investors, those are the likes of your pension funds and fund managers. And retail investors, that's the normal mwananchi, including people in the diaspora. A good market to use as an example to see how things really work is India. Okay, granted that economy, bigger population, bigger GDP, a bit more sophisticated than ours. But if you look at the trajectory they've taken, they first focused on mobilizing local investors with a particular effort on retail investors, okay? And then the second thing they did is they said, we are going to use technology to actually open up the market to everybody. And then number three, we are going to make it essentially very easy to trade. So when we formulated our strategy, we said, number one, we have only 3 strategic objectives for our strategy. It's not a complicated strategy. I have a strategy background, so we can do very complicated things, but we went for 3 strategic objectives. Number one, to revitalize our markets. NSE in many ways had been very subdued, 2023 backwards, okay? So we said we need to revitalize our markets, okay? I will come back to that. The second thing we said is we're going to harness technology. And number 3 is to optimize organizational effectiveness, i.e. looking internally at what must NSE and its ecosystem do to make things easier. If I go back to revitalize markets, Janet, which actually speaks to your question in specifically, and there we said, number one, we are going to mobilize 9 million retail investors. That's both domestic as well as diaspora. 9 million. Keyword being active. Active, okay? I'll come
9
back
million
to
investors.
9 million, not investors, 9
Individual.
million retail investors, active, okay? Number 2, we said we also need to be relevant to the economy. How do you become relevant to an economy like ours? Number 1, you have to be relevant to the single biggest sector in our economy, so agri. So if we are not relevant to agri, basically we're not relevant to the economy. So we set up a team that wakes up every day to respond to that. Then we said we need to be relevant to SMEs. The entire economy, by and large, runs on SMEs. So we have to wake up every day and be responsive to SMEs. Then we also said we need to go where retail investors are. Where are they? They are in SACCOs, they are in chamas. So we said we need to wake up every day and interface with SACCOs and chamas so that we get a better sense of how to support retail investors, among other initiatives, including financial literacy and investor education programs. What you've seen in the recent past is us actually now using platforms like this and others to take the message out, but also to engage with retail investors. Okay, for example, we have retail financial literacy programs that we're doing across the country through partners, through SACCOs, etc., just to reach retail investors, even universities. We have university student investment forums to engage with them. We've started also engaging with the local language stations. We have rolled out in partnership with Safaricom, ZD Trader, which enables you to trade on your phone. We have started conversations in the industry around the cost of trading to see how we can optimize that. That's still an ongoing conversation, because if you don't optimize the trading cost, then retail investors in particular find it more expensive to trade compared to institutional investors who can negotiate lower fees. Okay, we are upgrading our technology. Actually, that's the single biggest market upgrade infrastructure project that we have in the country as far as the capital market is concerned, to upgrade the NSE systems, the depository systems, in order for us to have more modern systems that people can interface with more easily without a lot of manual workarounds. And then lastly, of course, we also changed some of the rules in our market. Last year, we got approval from our primary regulator, the Capital Markets Authority, to start single share trading, i.e., for 70 years that the NSE has existed. 70 years. You know, that's probably before I was born. Probably. You used to buy a minimum of 100 shares of any particular share. Okay, what that meant is really it's only people with money that could really participate. So we changed that rule last year. So you cannot buy a single share.
You can buy one share of a company.
Exactly. Okay. See, there are shares like 300 shillings per share. Imagine if you have to buy 100, obviously the numbers are bigger. Now you can buy one share. One share.
Okay.
Yeah, so things are changing.
Before you come in, Eric, I think I'm trying to put myself in either my own shoes or the shoes of somebody else. Despite all this, do you still get the sense that something isn't landing? I'll give me as an example.
Okay.
I've been pretty interested in trading on the NSE, and you speak to an agent or broker, and sometimes you get the sense that they almost caution you. Right? They're just like, well, there's no guarantee. And I push back and say, but see, life is risks and trying to figure it out. And then it holds me back. So I'm also trying to unlock their kind of mindset on holding me back from going in. But how do you speak to people who are still cautious? Because you've just outlined some very critical, and we can see everything you've said, we can now see it. It's actually playing out. We can see more engagement. We can see that it's people are being invited more. And yet still, there's an element of people will say, if it's not a quick win, I don't know if it's for me, number one. Or number two, maybe in as much as it's more inclusive, it's still for a specific kind of person.
Gotcha.
So I'm almost taking you back to, trading 101. I don't want us to get too deep into it. But how do you assuage those fears of people who are still saying, I don't know if this is for me? Yet from everything that you're saying and what we've seen, it's a great place to, put some of your money.
Understood. I think first you're right that it's a journey. You gotta start somewhere. If you look at how we are approaching this, the first thing is investor awareness. It's one thing to talk about trade this, trade that, but if you're not aware of it in the first place, that would be difficult. So our first action, order of business, is to raise awareness about what the opportunities that are available at the NSE and then more importantly, how to actually access those opportunities. So awareness is a big action point. And we're doing that across, as I said, across the piece, both through engaging with the partners, but also the intention is to also engage with other people that are speaking to this constituency, influencers, for example.
Yeah.
Okay. Now, the idea would be that we need to be careful about matters investment. We are not selling chickens in the marketplace. We're selling investments, okay, that are regulated, that have to be promoted in a licensed and regulated manner, and that also, as with every investment, they have their own risks.
Yes.
Markets come ebb and flow. There's no market in the world that always goes up. Sometimes it also goes down.
Yeah.
Okay. Although NSE so far has been on the up and up and up. So investor awareness, number one. Then we start raising that awareness through, not just through NSE directly, but with partners. Forums like this, influencers, etc. You'll see that actually becoming more and more real. And then there is working, of course, with our stock brokerage community and the Capital Markets Authority to curate more specific financial literacy programs. Because sometimes people may not understand that if I buy, let's say, NSE is listed on its own exchange. So let me use NSE. If you buy NSE shares today, they could go down and they could go up. But if they go up, the question could also be, when do you sell? Okay? And what do you look at if you want to sell?
Exactly.
Okay? And more importantly, if they go down, do you keep and hope for the best, or do you get out?
Yeah. Cut your losses and move.
Yeah.
Cut your losses and move.
Potentially. I'm not saying that's necessarily the case, but that's potentially an option. So the key point, I think, here is that the hesitation is probably down to awareness and maybe also getting more information on how the market behaves. Currently,
but as Janet is telling you, as her own example, that hasn't changed. The hesitation among many people has not changed.
Yes.
If I just, and we're going to a break shortly, if I just think about the kind of information that I've seen about MMFs in those last 2-3 years, right? And I'm sure you have the numbers, the uptake of MMFs versus the participation in the Securities Exchange by retailers, which ones would you say would be higher?
Currently, as we speak, it would be MMFs. However, I think you do also need to understand these are two separate products.
I know.
And for the record,
it's people's money.
For the record,
I'm making, I know, Frank, and you will come back into it. The point I'm making is, whereas you see more people actually having these conversations online about, where do I take my money? MMF this, MMF the other, online trading, online the other. You don't see much information that is positive about put your money in the stock exchange, buy this share and the other. And when you go to a stockbroker, like Jana is saying, the stockbroker is being measured, maybe it's a regulation, maybe whatever, but that stockbroker is being measured in how they are actually explaining to you.
Yes.
So you listen to this guy who's like, it's an ebb and flow, it could go up, it could go down. And these are the people are telling you, put your money here, this is the return, 11%, and so on and so forth. And you can see 11%.
It's interesting you say that because actually, toe-to-toe, NSE has done multiples better than MMFs.
Oh, really? Yeah?
Yes.
Okay, welcome.
Yes. I can guarantee you. In fact, I will also say, and this is not investment advice, but if you take MMFs and you take into account management fees, inflation, and tax, do the numbers properly. Be careful.
Let's come back.
Of what you're comparing.
Yeah,
Okay.
let's
Be
come back.
careful of what you're comparing.
Let's come back after the break because frankly, I'm ready. Like I'm ready to. I really am. I'm ready to.
I'm just
ready
saying.
to risk
I'm
it.
just saying.
But
let's compare things properly.
Okay.
We'll come back and have a look. We're talking to Frank Mwiti, who's the CEO of the Nairobi Securities Exchange, expanding retail participation in the stock market, and essentially just expanding participation all around in the stock market. So we're going to come back and continue the conversation with him. It's coming up to 7:30. Just before we get back to the conversation that we're having with the CEO of the Nairobi Securities Exchange, we have some feedback here. MNJ 8 5645 is saying, ask Frank, aside from increased access through mobile apps, brokerage fees and levies remain too high. Recently, CMA wants to increase its levy from all trades. How will this make it affordable to retail? Maybe we can start there, answering that question as we dive deeper into, just expanding that.
Sure. Thanks for that. I think it's a very timely question because there's actually a dialogue that conversation we've started with the National Treasury on the back of directives that His Excellency the President gave when he was recently at the NSE Actually, it started during the ZD Trader launch as well as the recent KPC listing launch. So the discussion is with the entire capital markets ecosystem. So that covers, of course, the exchange, the depository, CMAs in there, representatives from brokers, custodians, etc., that are focused on, among other things, the matter relating to cost, i.e. reducing the cost that particularly low-value transactions incur when you trade on the NSE. The intention is to, and actually the dialogue is being chaired by PS Kipto, National Treasury and Economic Planning, so it has the right attention. And the intention is to then, as an industry, table recommendations on how to actually manage the cost down. The primary focus will primarily be on lower value trades, not the larger one. So the journey is beginning. I think we are headed in the right direction, and those costs will impact ourselves as NSE, CDSE, which is actually what the gentleman or lady is referring to. There was a publication just recently around increase of levies on the depository, CMA fees, and broker fees. So the conversation is looking at it holistically, but we haven't arrived at a final number, although we have made submissions on the proposed reductions.
Okay.
Yes.
Okay.
So let's now look at just participating in the stock exchange as a retail investor.
Yes.
Right? So speak to me as a retail investor. I want to buy shares on the NSE.
Yes.
What do I need?
Okay, so
number one, money, but
okay, true. Well, it would be good to have money because I think that would be important. That's crucial. But the first bit is to have an account, a trading account. There are three potential ways of going about it. The first one is to open a CDS account. Okay, you do that through the depository, and your selected broker can also assist you do that.
What's a CDS account?
See, the Central Depository and Settlement Corporation is the entity that is responsible for essentially keeping all accounts that trade on our exchange. Okay, so if Eric wants to trade open an account and trade, you need to have a CDS account. And that, as I said, can be done directly at CDSE or through your broker. Some of the brokers have made it electronic, so you don't need to fill a form. You can do it digitally, but most of them still require you to fill forms. That's option one. Option two is ZD Trader. So ZD Trader, if you are on M-Pesa, you just go to M-Pesa, you look for ZD Trader account, you start trading automatically. Why? Because we rely on the KYC, the know your client documentation of M-Pesa to decide to actually know that it's Eric or Janet and that they are fit for purpose and they're not criminals and anti-money laundering, etc. So you can do that instantaneously. So that's the second option. The third option, of course, is you can trade our market by investing through a fund. So there are entities out there that are licensed by the Capital Markets Authority where you can essentially invest money with them, and then they will invest on the exchange on your behalf. Okay, so you have more or less three options. Once you have an account, then there is the issue, as you said, Eric, of funding the account, i.e., putting money in the account, so that then you can buy whatever shares you want. Our exchange has over 60 stocks listed on exchange, including structured instruments like real estate investment trust and exchange traded funds. And it covers about 11 sectors. So banking, investment, oil and gas, energy, etc. Okay, insurance. So you can choose which sectors you are interested in, or you can invest in all of them, if, depending on your appetite.
Okay.
Of course, it's important to keep track of how your investment are doing, so that at any given time, if you want, for example, to sell and you have made some money, i.e. the stocks have gone up, then of course you can sell, and the reverse happens, i.e. the stocks are sold and the money goes either to your broker, who then puts it in your account, or in the case of ZD Trader, it goes directly to your M-Pesa automatically. Okay? So one way or another, you are either opening an account, funding it, deciding what to invest yourself, or asking the broker for advice, or the fund manager who's managing the fund does that on your behalf. And at any given time, you can sell or and exit, or sell and reinvest.
Okay.
Of course, if there are dividends, then they should come to your account also automatically, without you having to chase. Either directly again to your account, or to your M-Pesa if you're on ZD Trader, or to your fund manager, and then back to you. And as a shareholder, you are entitled to attend AGMs, annual general meetings. You are entitled
of that company.
Of course, even if you have one share. Yes.
Participate.
That's the law.
Okay.
Yeah.
There's still some feedback. I know you wanted to come in. Again, the same person has said the NSE is one of the better performing exchanges after Ghana, Nigeria, ATC. Problem is market depth. I still don't understand why certain companies remain listed despite flaunting disclosure regulations. I'm trying to see if I should name said company, but it's on the comment section. You mentioned Uchumi. So they say that the problem is market depth. So maybe you can speak to that. Caxton also says, what exactly do image registrars do in regards to the stock market? I heard of them during the KPC IPO. Okay. So let's speak to market depth. Okay. And then now the image registrars.
Oh, okay.
Yeah.
So maybe before I mention about market depth, I think it's important to understand that different listed entities, i.e. different stocks that are listed on our exchange, perform differently. So it's not right to paint the entire market as it has a depth issue. It doesn't. It depends on which counters you're talking about, which stocks you're talking about. And as I said, if you are invested in our market January to February, you'll be up 13% year to date. Okay. Now there's no instrument currently, unless you're doing drugs, that will give you that return. Okay. Now market depth. Market depth is a function of different aspects. For large institutional players who are moving fairly large investment quantums, market depth for them is there are different ways of actually achieving market depth. So, for example, it could be that you focus on the very high liquid counters. So, for example, the top 20 listed instruments, all of whom are fairly liquid. You can enter and exit those stocks at will, any time of the day, without a lot of friction. Of course, if you're a big player, you don't want to do that in an uncontrolled manner, because then you might move the price against you. For the retail investor, for the top 20, again, we are okay. I don't think we have actually I would say top 25, it's not really a challenge. For retail investors, it's not a challenge, because again, those are fairly liquid counters for purpose of retail investors. Okay. The challenge comes when you're dealing with some of the other counters that are either very closely held. By that I mean the main investors are not willing to sell. They have bought and they will hold till kingdom come. So you might be interested in some of those, but
nobody's selling.
Nobody's selling. And if you also buy, chances are you don't want to sell, because maybe the investment returns are really good. The profits are good, the dividends are good, the capital gains are looking good. So therefore, you might want to buy, but no one is selling. So that's not an NSE issue.
Right.
It's a structure of that particular counter. How markets deal with that, especially companies, is they might say, we'll do maybe, let's say, a bonus split, a share split, so that you have the amounts that are, it's called free float, the amounts that are available, there's more quantum. available to trade, because the main investors, think of, for example, a subsidiary of a multinational, they're not going to sell their stake because they are here to do business, and the intention is not to trade their shares per se.
Yeah.
But there are other structured ways of improving liquidity, which is what we are actually working on in collaboration with the likes of CME and CDSE, which is, number one, to look at enabling things like day trading. That means you can trade during the day. That brings a bit more liquidity in the market. Number two, there's something called securities lending and borrowing, so that you can lend. If I have bought and I'm not willing to sell, I can lend my security. You trade with it. It's a bit complicated, but the point is you trade with it. No, there are rules and how process of doing that. That security lending and borrowing, that can bring a lot more liquidity to our market. And then the other one is to do structured products. For example, exchange traded funds. A good example is our banking sector has 11 banks are listed. It's one of our best performing sector. It's up 20.38% year to date. Now, we can create a product that is a banking ETF. What that means is Janet will just buy that instrument, and she has actually bought a share of every bank that's listed on the exchange. Okay, so there are other ways of bringing liquidity to the market. Now, granted, it's work in progress.
Right.
But what I'm saying is, if you're a retail investor and you're investing in, let's say, as an example, the top 25 listed securities in our market, the NSE 25, really we should not be discussing whether there is market depth. If you are, because for retail investors, there's liquidity. Okay? 24/7, there's liquidity. If you're a large institutional investor, now we might have to have a conversation, because you might be looking to deploy $100 million, and that can be a challenge.
There's nothing to absorb it.
You understand? Yeah, maybe there are no people selling, or if you come to the market very quickly, the price can react.
Governance concerns.
Yes.
But when they ask, it's true, because the governance concerns around companies expected to list often come up. So how do you assure investors that they're buying into something clean and transparent?
Okay.
Yeah.
So I think it also touches on the earlier question about entities that may be going through challenges and are still listed on our exchange, for example. But let me tackle that very quickly, then I come back to governance.
Right.
So for the companies that have gone through challenges in the past, financial distress or other issues, and that continue to be listed, there is actually a dialogue we're having with CMA to create what's called a recovery board. It's a segment on our exchange that ideally will list entities that are going through challenges, and maybe they even have compliance gaps, etc. And then as they get better, then they move back to the main listing. There's a process. Other exchanges have done that as well. So there's a dialogue we're having with CMA on that. In the meantime, we are not delisting, but we put warnings or notifications on those counters, okay? Because again, delisting is also rules on how you delist. It's not cowboy type. Today, Janet is listed, tomorrow we kick you out. No, there is a process, because there are investors behind you, there are employees behind you, etc. Now, governance. Ultimately, listed companies should be at the apex of the best governed, the best compliant, the most compliant businesses in our economy. And by and large, that's the case. But we are not operating in a vacuum. So from time to time, there will be entities that will have governance challenges. Our responsibility, both as NSE, of course, working in collaboration with the Capital Markets Authority, is to work hand in hand with these entities. One, to ensure they are compliant when they are coming to list, and to remain compliant post-listing. How do we do that? We have inspections. We do training on matters compliance. We, of course, engage with them where we see gaps. And, of course, CMA itself also has enforcement authority by dint of law to push that through. What you are finding is that as more and more of these entities become champions of governance, I think you will find less and less entities becoming deviant. Let me put it that way. Yeah. But look, of the 63 that are listed on the NSE, I would say you probably have 1 or 0 that are currently not compliant with the matters capital markets. Yeah.
There's the question of the image registrars.
Oh, yes. So registrars, let me not talk about image specifically,
Image
but
is one of the many
It's one of the many registrars.
So who are registrars?
Okay. So first of all, these entities are licensed and regulated, okay, again by the Capital Markets Authority. What do? They offer registrar services. What are registrar services? So I'll give you a good example. Eric here starts a company called Eric Inc. And Eric Inc. has shareholders.
Yes.
That means you have a shareholder register.
Yes.
Janet is a shareholder, I'm a shareholder, XYZ. We have 100 shareholders, as an example. That you can either, you yourself, you can have somebody internally at your organization keeping
a record of
this register, making sure, for example, if there are dividends, who should get those dividends? If I sell my shares, who has replaced me? etc. etc. If you come to an AGM, we keep track of that in collaboration with your company secretary, etc. Now, in the instance of KPC had one shareholder in the name of Government of Kenya.
Yes.
And if you look at that shareholder register, you'll see the shareholder there is the CES for National Treasury and Economic Planning. That was a single shareholder, 100%. So that shareholder decided to sell 65%
of his shares.
Okay? Now, that means there were many shareholders that came in, including 70,000 retail investors, Kenyans, who invested in the KPC IPO.
70,000?
70,000.
Wow.
Okay? Those are direct individuals. Now, if the guys who came through vehicles, etc., bigger numbers. Now, image registrar's role, as with any other registrar, is to now say Janet has invested 100,000, Eric 200,000, Frank 10,000, like that, and keep that register. And that register then is, after all the work is done, is what is now passed to CDSE, the Central Depository Corporation. So that then they keep track now as you trade. People are coming in and out of that register. But that's essentially what a registrar does, okay? They are very important in public markets like ours, even private markets, because the more you have, if you have 2 or 3 shareholders, it's okay. But the minute the numbers start becoming bigger,
then the registrar is important. Our director is saying, kuna wenye walinunua shares na walirudishiwa.
There was, in the case of like an oversubscription of pipeline shares, for example. So what happened to if you're not allocated the shares?
Okay, ideally what would happen, and this is the case not just for KPC, but for any other IPO, if there's an allocation, first there's a process to allocate, which ideally would be proportional to how various categories subscribe, and then the difference really is supposed to be refunded back to you. You have 2 options. You can take the money, or you can ask, if you came through a broker, you can ask a broker, you know what, I want to reinvest that money by buying KPC shares in the secondary market, because you had appetite. Now there are shares available in the open market through NSE, so you can buy. Or you can take your money and buy something else, or take your money and enjoy it. It's either way, you get a refund.
Okay. Frank, I'd like to go back into just talking to the retail investor. Because you're saying you're making it much easier for an individual to buy 1 share in the NSE, and multiples of that. And they can even trade directly. They don't have to go through a fund. They don't have to go through the CDSE or a broker. They can actually go through these platforms that you've created and buy directly. Now, the question would be, how do I know what to buy? When to buy? Just starting from that. Because I'll go into for example, the ZD platform, and I'm seeing a thing scrolling there. I'm seeing a table here with, companies and some things showing up, down. Too much information.
So I like your question, especially because of the quote that we started this.
Information overload.
Information overload. But before I respond to that, let me correct this point about broker. So remember, even for ZD Trader, there's a broker in the name of Kestro. Okay. It's not apparent to you, but there's a broker. So you're not coming to the NSE without going through a broker. It's just a question of is it apparent to you or not? But technically, there is a broker. And the intention is to open that up in good time to other brokers as well. The ZD Trader platform, So now, what do you trade once you come to the market? So I mentioned that, let's assume you have gone through the first option, i.e. you've come through a stockbroker, a licensed one for that matter.
Yes.
Very important. They can give you advice. Okay, they can give you advice. They are actually allowed, licensed to give you advice. They can recommend. You know, are you looking for? I'll give an example. They might ask, are you looking for capital gains? I.e., when I buy something, it will go up in price. Then they can recommend which ones they think will do that. They might ask you, are you looking for dividends? Then they will recommend shares that ideally have a track record of paying dividends, and the strategy is continuing. You might also say, I'm looking for affordable shares, i.e. the lower value ones, then they can recommend. Or you might say, I want a mix. All those things. So the broker can actually advise you. The second option, of course, is you yourself. If you attend a lot of the training that we offer and other partners offer, you can actually get insights on how various markets are performing, various sectors are performing, analyst prediction on how certain companies will perform, and you use that to buy or sell or hold. There are three options. Hold what you already have, sell what you have, or buy what you don't have, or increase what you already have. So now, ideally, you should have that background so that by the time you come into the market, either you're being advised, you've gotten some research, or it could be your own research. I'll give you a good example. If you are employees of NMG, you probably have a view of the media market, how it's going to perform. So you might decide, you know what, I have some good insights enough without doing what's called insider trading, which is illegal, to invest in an entity that you are an employee of, because you have a good sense of how it's performing, and you also want to be a shareholder in the employee. So there are different ways of looking at it. What are we planning to do? In a proper market, there should be what's called equity research. There are people out there, entities out there that are waking up every day to research about Safaricom and give recommendations on buy, hold, sell. And that research is then available either in paid form or in non-paid form, and you use that as a basis to make investment decisions. That happens across the board. We don't have it now. NSE is trying to drive that.
To get there.
Yes, there's a second thing that's not working very well that we are working on, which is what's called investor relations. Listed companies should have very, very active investor relations teams whose job is to brief the market on how things are going. Those are the guys you see on NTV, Bloomberg, CNBC, and your other players. Those guys, that's investor relations. That's not working as well as it should. We are working again with listed companies to improve that. Yes. Lastly, is in the age of AI, the intention is something like ZD Trader and other brokers are also thinking about this, is to be able to, for you to use some queries, give some
you can
prompts, and it gives you recommendations, not advice. Recommendations.
I know. We have to pause there, but this is important. It was interesting. Like I said, mimi niko na vested interest, but also I think a lot of people do. When you hear the excitement around these possibilities, people just need to know the nitty-gritty. So hopefully they can also continue to ask questions. But we have been in conversation with the CEO of the Nairobi Securities Exchange, Frank Mwiti, who's also apparently they were high school mates. That was the backstory.
Yeah, that was the backstory.
That was the backstory. And I was like,
Spent 4 years of what? Early teenage years.
I love that.
Wearing shorts.
In the next hours, we speak matters, elections, leadership, and integrity. We're going to be having a town hall with various stakeholders answering some serious questions in this country. Stay with us. We'll be back in just a moment.